Once again, I want to welcome every one of you. Welcome back to continuation of Candle Must Close. A lot has been done here, and I'm sure a lot also has been achieved. If you have not watched our previous videos, this is a continuation. I think this looks like either the part 3 or the part 4. So if you are beginning from here, I will advise you to go back to the previous playlist and watch what we've talked about. Now, we have explained that candles are not just pictures of color red, color green, or whatever color that you decide to set your platform to give you. I've said that several times. They are graphical representation of the activities of both the buyers and sellers in the market within a period of time or a particular time frame. And I've also said that that time frame is very, very key depending on the type of a trader you are. If you are a positional trader that loves to take trade for maybe months, candle must close teaches that you will have to do your analysis at the end of the monthly close candle. You don't do analysis before or while the monthly candle is running. That is why we say it must close, or let's call it candle must close. Whether you like it or not, you must allow it to close. You must allow it to close before you do the analysis. Now, if you are also a swing trader, we advise you take your trade for maybe 1 week, that's 7 days. You must allow weekly candle to close. Okay? When you are a day trader, you must allow the daily candle to close. If you are an intraday, maybe you are trading 4 hours, you must allow 4 hours candle to close. Scalper could be 15 minutes. So we've talked about that in previous videos, and we've also talked about in this concept before you begin to do the analysis where you will eventually pull the trigger. That means you will enter either sell or buy. And before you do that, of course, you must do the analysis. Now, one of the things I have not mentioned is the fact that many people have asked, what is the place of top-down analysis? This is very powerful. We are not against it. But remember, if you are a positional trader and you are dealing with monthly, what it means is that at the close of the monthly candle, you will now go into the monthly, you will go to lower time frame and begin to analyze to the lowest where you pull the trigger. That is also top-down analysis. If you are a swing trader, when the weekly candle closes, then you will open into daily 4 hours or 1 hour or 15 minutes and do your top-down analysis. So this concept does not speak against any strategy, any method. I believe this concept will only help you to have an edge or an advantage where you have a better understanding of what you are doing. Okay, that is why we advise you to look at it very carefully. Don't ignore it. Don't despise it. If you don't know it before, yes, you don't know everything. We don't know everything. We continue to learn. Now, in that analysis, we consider 3 things, 3 keys to our analysis, which we have also described in previous videos. We talked about the direction. We talked about the levels, and we talked about the candles itself. Okay, this is 1, this is 2, this is 3, and we call these DLC. So anytime you want to do analysis, you must consider first your DLC. So we've talked about D, which is the direction. And the last one we spoke about before here is the levels. So in these levels, we've talked about the minor levels where you see, we also talked about the major levels. That's where we get the direction. So let me not use the previous videos. So go and watch that. Now, here we are focusing on candles. Okay, we are focusing on candles. And in focusing on candles, we talked about level previously. I just want to bring something because I remember levels are point of reaction. And there's a particular level that I did not really give you much information about. You know, we spoke about different type of level, the SNR, you know, supporter and resistors. Then I also mentioned about candle levels. Candle levels, I didn't talk about that. Now, let me quickly mention this one so that we can move into the next point we are focusing on. Now, what are candle levels? Candle levels are powerful levels in the market. Now, in understanding candle levels, I want you to look at this left side. Remember, I always talk about left side. Okay, the left side is the history side. Look at this left side. Now, in this area, do we have a candle level on this weekly time frame? The answer is no, we don't have a candle level. We don't have a candle level. What are candle levels? Candle levels are, now you look at from this area to this area, what do you see? You see only green candles. Only green candles. Now, if for instance, we have a red candle in between, let's say we have a red candle in between. Okay, let's say here we have a red candle, meaning the market moves from here. The market moved from here, got to this area, then we have a red in between. This red candle here is what we call candle level. That's what we call candle level. And what that means is as the market will be coming from the right side, when it gets to this area, the market might respect it. So if you are seeing sellers here you might see buyers. You might see buyers. So when you are trading a higher time frame, you need to pay attention to those candle levels. I don't want to say much more than that because in our CIF, Candlestick Intelligence Framework, we speak about these details. Okay, so let's move on. So now, having established that, we are dealing with candles now because we've talked about direction levels. So we are dealing with candles. Now, in candles, what do we pay attention to? What do we pay attention to? In candles, we pay attention to what we call pressure. The pressure of the candle. The pressure of the candle, we pay attention to whether the candle is strong or whether the candle is weak. Okay? Those are the things we pay attention to when we mention pressure. Then the third thing we pay attention to in candle is we pay attention to the new low. That is in the case of a selling candle, or new high in the case of a bullish candle. So in our DLC, under candlestick, we pay attention to the pressure of the candle. And that pressure, we talked about whether it's strong or weak. And at the same time, we look into the new low or the new high. Now, in looking at this, we have looked at this major area. We've talked about all of these activities. Now we have this candle. We have this candle. So as we have this candle, let me remind you what we did. This is what we did. Let's do a little of, let's do this. Let's do this. Okay, so let's assume this is what we have. Okay, we are doing a playback. Let's assume this is what we have, and we are trying to trade the next week. This candle now had close. So what are we going to do? We want to trade the next candle, the next week. So the first thing we are going to do, we have looked at this major direction. Then we have noticed that the candle has broken this area. Then the next thing is that we are looking at the left side here. So between here and here, we know that there is no candle level. So what that means is that chances are that the market might move from here where it is right now to at least this area before the buyers might come in. That is our projection. That is our speculation. That is our prediction, okay? But we don't just do that. We have to look at the candles itself. Now, what do you mean by the candles? You look at this candle that form. Does it form weak or does it form strong? Now, of course, the strength of the candle is mostly known by the body of the candle, comparing the body with the wick. So when you look at this body is a very strong body. So we already know that this candle is strong. Then we also look at something again, which we have mentioned, the new low. The new low is with respect to the previous candle. So when you look at this candle, it has made a new low to this present candle, the previous candle, which is this. This is a new low. So with the candle closing here now, we know that there is no level at the right side. So we're expecting the next candle to come here because there is a change of direction from this area. So this is what we expect the market to come into. So here we are expecting to take another selling candle. That's what I mean. So this is why candlestick intelligence framework is a very powerful thing. And as we look into it with this concept of candle must close, it's another amazing concept. Even though I know you have seen it before, but you can go back and do your back testing, especially on a higher time frame. It will be very nice for you. So let's see it again. Let's see. Like I was saying, let's see. Let's do a replay. So you do this. You can see the next candle. So you can see that the next candle, what does it tell you? The next candle is not a new low, but at the same time, it could make a new high. And so what you are going to be looking at is that we're expecting this candle to make a new low. Okay? He didn't make, let's see, because I think that's not completely formed. Okay. Good. I want to, good. Now look at it. Look at it. Very, very important. Sorry. I want you to look at what I'm saying to you. Look at this candle here. This next one, he made a new low to this one. And what is very strong. So because it's very strong, and look at, don't forget the left side. Okay? If we have green, red, we cannot follow this concept under candlestick. There's a different way we analyze that. But because this is very simple one. So if you want to trade like this, you can decide to be looking at the left side to trade the right side. If you want to make things simple for yourself. And if you don't see the left side and giving you this idea, you can wait until you see that. That is another style or strategy that you can create for yourself. Okay, whether in monthly or weekly or daily. Okay, you can do that. So now look at it again. After that candle, let's look at the next candle. So this one made a new low. The candle is strong. The left side is okay. Now this candle right now, this next candle, this next candle, that's a hammer candlestick. Under candlestick intelligence framework, there are some specific candles we also talked about. Hammer is a continuation. And we already know that the market is in this area. So looking at this candle it looks very weak based on the body. Okay, based on the body. But we have a new low. Then at the same time, we have our left side. So out of 3 points, we have 2. And also, coupled with the fact that that candle is known as a continuation candle. Continuation to where? Continuation to at least this area. So in that case, we are going to take another trade. another trade for the next week. And that is why you are seeing this candle. So if you look at this candle now, this candle, what has it done to us? Let's see. You can see. Now, you see this candle now. So you see that it has made a new low, okay? And it's very strong, but there's a level here. So you have to now be wondering, what do I want to do? Since there's a level here, you either wait, because I told you something about a level. When you get to a level, you either wait or you pause. Allow the market to do whatever it wants to do. But I actually know what to do here because of candlestick intelligent framework understanding that I have. What do I want to do here? It's another concept completely, because I'm going to be looking at the momentum here. If I look at the momentum as which the market is coming from, I'm seeing another level here. So this market might break this level and come to this area before it changes, okay, because of this momentum. But let's stop here, because I want you to just have an idea of this concept we're introducing to you. We have all the details under CIF, Candlestick Intelligent Framework. So this is what we are trying to introduce. But the little one we are giving to you, I believe is good enough that can help your trading. It's good enough that can improve certain parts of your trading. It's good enough, especially when you know the direction. Because direction of the market is one of the most powerful things that we know that helps. The moment you know a direction, then you can now begin to say, okay, now this is what I'm going to trade. So ladies and gentlemen, we have been able to successfully talk about your direction, which is your D, and your levels and your candle under candle must close. So when all of these things are completely done, then the next thing you are going to do is that you will know what? You will now go into deeper analysis, where you go into a lower time frame and begin to check into some other areas, which many of you are aware of, your structures, your internal levels, and all of that. Change of character, break of structures, then you now look into entry. But ladies and gentlemen, I present to you the candlestick must close, or candle must close concept that we are looking into. Okay, so the next area under candle must close is we now do the proper analysis, where we can give you an idea of when to pull the trigger. So you can watch out for our next video, and please, I would like you to subscribe to this channel. I would like you to write your comment, and at the same time share the video. Share the video. Let people know that this is a concept that might help them. Let them watch it and see one or two things that they can pick to learn from. Thank you very much, and see you in the next class. Thank you.